Good morning, everybody. Grab yourself a coffee, sit your butt in the chair, and let's do a little bit of chit-chatting. So I wake up this morning, the first thing I go do, mouthwash, brush my teeth, and get ready to go for the day before I go hug my son. And I read a story from Wall Street Journal. Wall Street Journal says the US stocks rise, finishing a strong July. And these are the indexes, in blue is the Dow Jones, in gray is the S&P, and the goldish yellow is the NASDAQ. Major stock indexes rose on Friday to end their best month since 2020, clawing back some of their losses from a dismal first half. Okay, so in the first quarter, we had literally the worst first quarter in history, or one of the worst first quarters in history, very close to the worst, if not the worst. Then the first half, same thing, totally foobarred, right? So January, February, March, April, May, and June, foobarred. But now we have July. And it's very interesting what's happening. The S&P 500 gained 9.1% in July, while the Dow Jones Industrial Average rose 6.7%, the strongest monthly showing for each index since November 2020. The tech-heavy NASDAQ composite climbed 12% for the best month since April 2020. I'm feeling it. I'm loving it. And the question is, why is this happening? So one of the things it says, investors have taken comfort in recent days from the idea that slowing economic growth might encourage the Fed to raise rates at a slower clip. They also have been encouraged by positive signals during earnings season as expectations for quarterly profits growth rose over the past few months, right? Amazon didn't do so bad, Microsoft didn't do so bad, Google didn't do so bad, Apple didn't do so bad, Tesla didn't do so bad, right? So a lot of these huge components of NASDAQ and the indexes didn't do so bad. Gas companies are absolutely blowing it out of the freaking water. In 2 weeks, we're going to have the PALANTIR earnings. Guys, join me live for the PALANTIR earnings. I think I'm going to have Arnaldo and Emmanuel, who's going to do the live with me, and we're going to be talking a little bit about PALANTIR. I hope you guys are going to enjoy that. So the question is, what the hell is going on? So now you have the Federal Reserve that's saying we're not in a recession. We have Biden that's saying we're not in a recession. And the question is, why is everything rallying? Everything is a lagging indicator, in my personal opinion. And when everything seems bad right now, it's actually showing what was bad before. And actually what's happening right now can possibly be a lot better than the numbers that you're getting. What does that mean? So the numbers that you actually got for Apple, Google, all of these, this is actually for the last quarter. So it's at least 1 to 3 months old, right? The data that you're getting. The CPI is also old. Everything is old. This notion that the Federal Reserve is not going to raise interest rates as aggressively, I think would be a huge mistake. I actually want the Federal Reserve to raise interest rates like they were planning to and get the federal fund rate to around that 5%. I'm predicting 4.5% to 5.5%. And then somewhere around the halfway point of 2023, they're going to start lowering the rates. When they start lowering the rates, or when they stop hiking the rates as much, then I believe that the market is going to boom. By the time the market booms, and I keep saying this all the time, it's already going to be too late for most people. And that generational wealth, that shift, that boop, is just going to skyrocket. I don't think that the Federal Reserve is going to be doing anything less than 75 basis points in the next meeting. However, we have 2 CPI reports that are going to be coming out. If the CPI reports drop inflation severely, then yes, maybe they're not going to be raising by 75 basis points, right? Because they don't want to trigger an official recession, although we are most certainly in a recession. I honestly think this is what's happening. People are just fed up. There is a lot of pent-up aggression, pent-up demand to buy. People are tired of selling. People want to buy. Now, whether this is an organic or artificial rally, we're only going to know in a couple of months. I don't think that we're completely out of this, but I do think that we're on the second half of this recession. We are on the second half of this bear market. And I gave people these numbers before, but let me just paint a very clear picture for you guys of what's going to happen in 2023, in my personal opinion. First, in 75% of the cases of all bear markets, which we had this year, the following year after a bear market, you have a 75% chance of it being an actual green year. And it goes up, I believe, by 17%, if I'm not mistaken. So we had a total of 13 recessions, modern day recessions. Of the modern day recessions, And that year that we had negative was 7 out of 13, right? So just over half, we had negative investment in the stock market. Of the year, we had a recession. If you consider this a recession, we have a negative stock market, well, then the second half of this video is going to be for you. Of those 13 years that we had a negative stock market in the recession, the following year, only 3 times have we had a negative growth year in the stock market, which means if we had a recession this year, which I believe we did, now they're going to try to flip it, but we had a recession and we're negative S&P 500 this year, that means that next year, the chances are only 3 out of 13. If you look at the past history, that's also going to be negative. The interesting thing is, out of those 13 recessions, only 1 time have we had a negative S&P 500 and a negative S&P 500 at the same time, the year of the recession and the year following the recession, right? So only once. And since we had a negative year this year, the chances are that next year we will not have a negative year in the stock market. It's going to come back. One of the reasons this happens is this pent-up aggression. There's something called overbought and oversold. Right now, everything is just oversold. People panicked, people went crazy, and people sold, and now they have a lot of money on the sidelines. I guess panic is a bad word to use. People did the right choices, what's good for them, and I'm not a financial advisor. This is purely entertainment and educational purposes, but now there's so much pent-up demand. The main thing that happened during the GDP is that the negative GDP went from 1.6 to negative 0.9, which means that the GDP negativity is contracting, which means that our economy, although slowed down, is starting to ramp up again. Now, we might have another GDP negative quarter, maybe, but I believe that the one after that, we're going to be okay, right? So quarter 3 is probably going to be negative or maybe going to be negative or just slightly positive or negative. But quarter 4 is going to start coming alive. By the time we see quarter 4 numbers in quarter 1 of 2023, I do believe that the rates from the Federal Reserve are going to start coming down. This is what I personally believe. But as you can see, the stock market rallied like a mofo based on what, right? Based on what? Were earnings that amazing? No. Earnings were good, but expectations were also very low. There's going to be a follow-up to this, and I think the pent-up demand is still going to be here. Are we going to be reaching all-time highs? This, I have no idea, and I don't think so, but we are going to come back. So the recovery that I foresee for me personally right now is not some all-time high for crypto, not some all-time high for stock markets, but somewhere in between, right? Definitely not lows again, somewhere in between. I could definitely see Bitcoin in the range of, 30 to 40s, right? I could see that. Is it going to hit an all-time high in the end of this year? No, probably not. Is it going to hit an all-time high next year? Probably not. Maybe, but who knows? But it most certainly is going to be a lot stronger than the point that it is right now. And so will a lot of stocks. And a lot of people that got the opportunity to dollar cost average during this entire downturn are going to prosper so massively when this goes up. Why? And I'm going to use this picture from Bitcoin or this picture from stocks or from real estate, whatever it is. When something is the price of 50 and then it goes up to 100, people are lining up to buy that for 100, right? But then when that thing that was 50 now goes down to 25, nobody wants to buy it. Why? There's something called FUD and there's something called FOMO. And this is such a real thing. And this is something that you need to take out of your investment strategy. And I'm guilty of it too. I'm trying to train myself to be better. FOMO means fear of missing out. That means when everyone starts buying and you see this really big green candle and everything is going up, 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 people are running so fast to buy. But as things is going down, the same exact asset that you were about to invest in, there's something called FUD, which stands for fear, uncertainty, and doubt. And now you just want to sell, and nobody wants to buy at a lower price. Why? Most people don't do any fundamentals, and they don't have a core value of the asset that they're investing into, right? So they don't really believe what they're investing into. Most people, they invest in an echo chamber, right? One guy says this is good, the other guy says this is good, the other one, and people believe them, and they're like, oh, must be great. Guys, Definitely do your own research. And if you are investing in something, unless it's a YOLO play, and I have YOLO plays as well, where I don't really care what happens, whatever happens, happens. But it's a small part of my portfolio. For the most part, the plays that I buy into, Palantir, Algorand, NVIDIA, Tesla, Bitcoin, right? These are companies that I really, really love and that I really, really have high conviction for. So if things start getting bad, I'm like, yo, that's okay. I'm just gonna keep buying more. Now I put my money where my mouth is and I don't just talk, I actually do it. Guys, this is the public portfolio. I opened it up in May. I'm up around 18.2% since May. The reason why I opened up this public portfolio, so I put in around 16,000 something, is because a lot of people are like, oh, Adam, you're doing a lot of talking, but you're not actually making moves. Well, I wanted to show you guys that even in a bad down market, you can still make money. As a matter of fact, I'm doing better in the public portfolio than I'm doing in my own personal portfolios, because in my personal portfolios, I bought when it was high. However, I am dollar cost averaging and bringing that gap ever closer because I was able to buy in a down market. When that bull run is going to happen, it's going to be absolutely ferocious. And the question is, what are you guys going to do about it? Are you guys in the game or are you guys not in the game? And as always, let's check the gas prices. This is the gas prices for today, $4.23. Yesterday, the gas price was $4.25. A week ago, $4.38. And a month ago, $4.85. Now, you guys are going to say, Adam, it barely went down. But every time I make a video, it barely goes down. And although $4.23 and $4.25 is not a big deal, when I started making this, it was $5.01. So it actually reduced about 15% in the last month. The price of gas is slowly, steadily going down. The recession eventually will be gone. The stock market will go back up. How and when? When the rates start dropping and all of these companies are going to be borrowing money. Because even your biggest, baddest GM, Ford, Amazon, all of these companies have debt. Not all of them, but a lot of them have debt. And when they borrow money, and when they're borrowing billions of dollars, and they have to pay 5% interest or 2% interest, that's a huge difference in the amount that they're paying. So they're going to think twice as the rates are higher to actually invest in their company and develop anything. But as the rates start going lower, they're going to start borrowing more money. When they borrow more money, they now have capital. They're going to inject the capital into their business. They're going to inject the capital in research and development. They're going to inject their capital into marketing. They're going to inject their capital into growth, so on and so forth. And then that trickles down to the economy to a bunch of different sectors. If they spend money on advertising and marketing, YouTubers get that. If they spend their money on research and developers, engineers get that. If they spend their money on development, a different type of engineer will get it, right? So you guys understand how everything works. Everything trickles down and it starts at the top. Guys, I hope you got something out of this video. This is just a general macro market review. I hope you guys get something from this, man. And just because I'm talking about it doesn't mean that I'm right. I'm just giving you guys my own personal opinion. Thank you. Have a great day. And I'm so happy that we actually made some money in July. See you later.